Hey, what is going on, guys? My name is Nick, and in today's video, I'll finally be giving an update on Shopify stock, one stock that I've been extremely bullish on over the past few months. As of now, Shopify stock trades for around $35 or 46 Canadian dollars after its 10-for-1 stock split that took place a few weeks ago, which in all honesty was not necessary at all considering how far the stock has already fallen. Just looking at a 5-year chart, we can see how Shopify's meteoric COVID gains were washed away within months, now being down nearly 80% from November 2021. Guys, I'll be completely honest and say that I did make a mistake in starting to buy Shopify stock too early when it had only dropped about 30% at that point. But nowadays, with the stock trading below its March 2020 COVID lows, we really do need to ask ourselves, is Shopify stock actually a really good buying opportunity at these levels, or is it a busted growth story? And in this video, I'll be answering that question right after analyzing their business fundamentals, the stock valuation, and then finally giving you all my thoughts on Shopify. So I would really appreciate you dropping a like on this video to help support my channel, and if you haven't already, please consider subscribing for more future content. And with that being said, let's get straight into the video. Alright, so the last time Shopify reported earnings was on May 5th for their Q1 2022 report, while they will be reporting their Q2 earnings on July 27th in a few weeks. If you weren't already aware, Shopify reported Q1 revenue growth of only 22%, which was down significantly from the prior quarter in which they reported revenue growth of 41% in Q4 2021. And although this growth rate might sound disappointing, Shopify was lapping Q1 2021 in which they had the highest revenue growth of the company's entire history as a public company. That being 110% year over year, which is absolutely ridiculous. So naturally the comps are extremely difficult in 2022 for Shopify since they are lapping that 2021 period where they were benefiting from those COVID gains and the stimulus checks. But I do believe this will change again going back into 2023 where their revenue growth should reaccelerate once again. Furthermore, Shopify changed the terms to make selling in their app and theme stores free for partners up to their first $1 million annually, terms that were not in place in Q1 2021. So while this might be a short-term headwind for Shopify, it's the best move long-term in my opinion, as it will attract many more developers to their app and theme stores, as well as increasing the overall value proposition for their merchants. As for the bottom line, Shopify was barely profitable in Q1, having adjusted net income of $25.1 million or 20 cents per diluted share, compared with adjusted net income of $254.1 million or $2.01 per diluted share for the first quarter of 2021. Being a company with very low profitability during these inflationary times, I will admit that there is quite a bit more risk investing in Shopify versus another company like Google or Tesla, for instance. And the fact that they've been increasing their marketing and advertising spend significantly year over year with new free trial offers that I haven't seen before, this does signal to me that Shopify is seeing a decline in natural demand for their services. But down the road, I do believe that Shopify can be a very profitable business model given that they do have that subscription-based revenue. It'll just take some time to achieve the scale necessary to reap those rewards like Adobe has now with their subscription-based services like for Photoshop and Premiere Pro. So then what about Shopify's balance sheet? Well, as of Q1, they have cash and cash equivalents of $7.25 billion on the balance sheet. However, as you'd know if you've been following Shopify lately, they did just close on their acquisition of Deliver, which is an asset-light e-commerce fulfillment service. The acquisition of Deliver enables Shopify to create an end-to-end logistics platform to unlock fast and easy fulfillment for their merchants to build out the Shopify Fulfillment Network, or SFN. The total proceeds of the transaction came out to $2.1 billion, where Shopify is paying 80% in cash, which does come out to $1.7 billion in cash. As a Shopify investor, I do believe this acquisition was necessary in order for Shopify to remain competitive with Amazon, which also did just release their Buy with Prime service. And of course, they are now more of a direct competitor to Shopify. Anyways, after accounting for the acquisition of Deliver, Shopify would have net cash of $5.6 billion at the end of Q1, but this will likely be below $5 billion at the end of Q2 because of other expenses. And depending on Shopify's cost control throughout this next quarterly update that we see, the possibility does exist that management might want to bolster that balance sheet in order to increase the amount of cash they have, either by diluting shareholders or raising debt. However, I don't think that will be necessary until at least 2023, and if they don't achieve positive cash flow by that point. Now, if we're looking at Shopify's valuation, there is no denying the fact that it is far cheaper than it was trading back in the pandemic. In fact, it is over 5 times cheaper. So here we can see Shopify's price to sales ratio over time, which is the best ratio to use for a largely unprofitable business, in my own opinion, that is growing very quickly. Right now, Shopify has a price to sales ratio of around 9, and to find it this cheap in the past, we'd have to go all the way back to July of 2016. So in other words, Shopify is trading as if it's a dead growth story, and it has not been trading this cheap within the past 5 years, even after the insane COVID crash back in March of 2020. Overall, given Shopify's incredibly hard comps that they're facing in 2022, and given the fact that the e-commerce industry is still set to boom for many decades to come, and the fact that Shopify's revenue will probably re-accelerate in future years, this is presenting a pretty good buying opportunity in my own opinion. And to prove my point, we can take a look at Shopify's website traffic like we did before Q1. As I pointed out a few months ago, Shopify's web traffic began increasing in Q1, which led to another record quarter, especially in terms of Shopify Plus subscriptions. However, I do think that the number of subscription conversions per website visit have gone down drastically since COVID. Otherwise, Q1 growth would have been significantly higher than I predicted it to be. So even though we are seeing a huge spike in Shopify's website traffic going into Q2, this doesn't necessarily tell us what the revenue figure is going to be. But of course, this is a really good sign that Shopify is continuing to grow their business, seen as June 2022 web traffic is up over 200% compared to June 2021. This greatly contrasts with the stock price having dropped about 80% over the past 6 months, so it could be presenting a great buying opportunity. Then on a quarterly basis, Q2 2022 web traffic is up 138% year over year, and also represents growth of 31% quarter over quarter, which are both massive increases. But if we contrast this to Amazon's website traffic, which is a huge overall indicator for the e-commerce industry, we can see that their website traffic is down year over year by about 10%, and it is flat quarter over quarter. So it's pretty hard to understand why Shopify's website traffic is absolutely booming, but then Amazon's is actually down year over year, but this is a very good sign for Shopify in my own opinion. I'm hoping that this does lead to much higher conversions and higher revenue in Q2, but I guess we'll have to find out on July 27th. So anyways, to answer the question that all of you have been wondering, is Shopify stock a buy right now or should you wait? Well, when we're looking at Shopify's valuation being the absolute lowest it's been in 6 years, and the difficult comps making these numbers seem a lot worse than they probably will be in 2023, I think this could be presenting a really good buying opportunity. But I do want to preface that with a few warnings. Shopify still is largely cash flow negative and unprofitable, so the current inflationary environment could hurt their financials further, even if they do see very high revenue growth. It's also important to realize that Shopify's cash balance has been decreasing over the past few quarters, especially as they made this $2.1 billion acquisition, which might bring their cash balance below $5 billion in Q2. And this means that Shopify management might want to increase their cash position within the next year or two via dilution or debt. However, I do find dilution quite unlikely, and that management would be pretty stupid to dilute the stock being down about 80%. But with all that being said, I have no doubts that Shopify will continue to grow and become one of the biggest e-commerce giants in the world. The business is still incredibly forward-looking, they're making the right investments, the management is top-notch, so I really have full confidence in Shopify to be able to build their business and continue growing. But I probably will wait until after Q2 earnings just to see how the company's cash balance is holding up and how the company is holding up during this inflation, so I will keep you guys posted if I do make any buys. But I would love to hear what you guys think down below. Let me know what your thoughts are on Shopify stock, and with that said, I will see you guys in the next one.